What's up, ladies and gentlemen? Welcome to another edition of Dream Firm Spotlight. My name is Tyler S. Clark, co-founder of Dream Firms, where we create generational wealth and impact for entrepreneurial accountants. And to help you to do just that, I am going to cover how this non-CPA sells $132,000 worth of tax plans in Q4 with just two clients. That may sound absolutely insane, but in her own words on this very channel, Miss Ine Jackson Atkins will tell you that she has in fact done that. She's one of our instructors inside of our community, and she is just an unbelievably dynamic person. And you will learn a lot from what I have to share with you now about how she was able to do that. And of course, from listening to her directly, whether it's with our interview or as an instructor inside of the community. Quick point. I sound a little down because my voice, COVID, all that. Just sorry, can't do anything about it. But in Q4, I refer to this as harvest season. Okay, so harvest season means that all the effort that you put in during the slow season, which is typically tail end of Q2, Q3, people are on vacation, businesses are just kind of doing their own thing and not really worried about accounting and tax. Your more proactive clients, the ones you can impact their tax liabilities, they start to wake up right now. Okay, so we're 3 days into Q4 as of filming this. So getting in front of those people, staying top of mind is so important to being able to get to being able to make a sale of this magnitude, right? And when we're talking about sales, I'm going to introduce to you a sales principle that I really like that helps with this a lot. And that principle is known as the 654 rule. So the 654 rule works that if you are generating a result north of six figures, well, then you're going to have the right to charge at least five figures for your services. And then you go to the 5-4 piece of the rule. And guess what? It's the same thing. If the results you generate for your client are at least five figures of savings, so $10,000 or more, you reserve the right to charge at least four figures for your services. So from 1,000 to as high as 99,000 or above, depending on, again, how close you are to the six figures. So this is just to put into context that the size of the result you generate is proportional to the amount of money that you charge. Now, this is this can unfortunately bring up a little bit of one of my biggest pet peeves, to be totally honest, because I think it's silly. There's this thing called Circular 230, which is saying you cannot charge contingent fees related to accounting and tax. And I understand partially why this exists. And I'm not here saying like, oh, the client's making 250,000, therefore apply this percentage to be able to charge 4 times the amount that you save them, and tell them you'll only charge them this amount after you save them $250,000. I'm not saying that, and I'm going to walk you through a sales process that allows you to do this ethically and not break the rules of Circular 230. Small side tangent, I just think it's a stupid rule. I really do. I'll probably get some hate in the comments for it from people who are like on some ethical high horse. But as long as the provider is ethical and is accurate in being able to predict what the savings are or what it is, and then charges based off of it, I see nothing wrong with it. Truly, I don't. Incentives are aligned. The client wants savings. You want to provide savings. You want to charge a percentage of what the savings are. I genuinely don't see what's wrong with being like, I deserve 1/3 of the savings. I don't see what's wrong with it. I never have. I never will probably. I understand that maybe there's an incentive that pushes the accountant or the CPA to maybe do some bad things to make more money, but as long as you're ethical, and we should be operating under the basis that the provider is ethical, we should be operating under that premise. You're not going to do that. You're just not. So I think it just takes money out of your pocket. I really believe that. Like, it's just like, I see people who are generating six figures of savings, and sometimes they're getting paid extremely low four figures. They're getting paid $1,000 like once. and the business is saving 6 figures or more per year. And I'm like, that's a 99 to 1 return on investment in year one, and then it's 200 to 1 in year two. It's just stupid, and it's unfair to the person who generated the result, which is you. It's you. You generated that. So again, I just think you should be fairly compensated for your expertise, comparable to the level of result that you generate. And if you can quantify and show what the result is, you should be able to charge based on it. So anyway, I don't mean to go on a side tangent, but it really kind of annoys me. All right, so let's go through the actual sales process here. Because again, this is not how they generate the leads for this. And needless to say, you need leads that have 6-figure tax problems or 6-figure tax bills to be able to sell 5 figures worth of services, which is effectively what Ine was able to do. So here's how this works. It's a 2-step sales process. And Ine will say this, all of our clients will say this. One of the biggest problems in accounting, talk to any accountant, is scope creep. It's that they're underbilling for services and they don't know what to do about it. Or they're spending a lot of time creating these quotes that never even get looked at or never get signed, right? Like they're wasting a lot of time on unprofitable engagements, or they're wasting a lot of time on things that don't even materialize into any money for their firm. And so at Dream Firms, we stop this nonsense. We're like, no, let's not do that. It's completely counterintuitive to what you're looking to build, your dream firm. And the dream firm usually has the owner as someone whose time is extremely well protected and is only deployed on things that they know are good uses of their time. And if you're wondering, oh, is it a good use of my time to talk to someone who's got, 5 figures or 6 figures of tax liabilities, and I have the ability to present to them a product/service that can reduce that significantly, I wonder if that's a good use of my time. Of course, it's a great use of your time. It's an awesome use of your time. So how do we structure that? How do we structure the sales environment to get them to connect the dots that they should be wanting to spend at this level, when every other accounting firm they've probably ever talked to is a 10th this price, a 5th this price, and you're now 10 or 5 times that price? How do we create that sales environment and have the client extremely excited to have gone through it, purchased, and got the result? Where have you been all my life? How do we do that? Well, I'm going to share it with you. So what we believe is the most effective way is a 2-step sales process. We talk about this a lot on the channel. I talk about it as much as I can because it is the cure to the disease that is unprofitability and bad engagements inside of accounting firms. And so the best way I can summarize this to you is there's a quote from Socrates that I love, which is essentially why he became as prolific as he is. I know that I do not know. If you go into a doctor's office and you ask them to give you medicine, they'll go, I'm not going to give you any medicine. I don't even know what's going on with you. I have no idea. And even if they said, well, I'll give you a few pieces of information, they'll be like, no, we have to run a full gamut of tests before I do anything. That's standard. And you're going to pay for it. You're going to pay for the right for me to give you these tests before I give you any advice or guidance or any medication. Completely standard in every other professional service, except for accounting. In accounting, for some reason, the client will come on, prospective client will come onto the call, and then we'll ask like 2 or 3 questions, and then we'll go back into some like black box cube room, and we'll be like, I think the quote should be Z. And then the client's like, okay. And then all of a sudden you're charging Z, but you only accounted for X, and then there's Y, and then there's F, and then there's D, and it all shows up, and you're like, oh no, I guess I just have to deal with this. Or we just fix the whole thing from the beginning. And the best way to do this is you position yourself as an advisor immediately, okay? People think that they position themselves as an advisor after they start to do compliance. Wrong. The image is cemented on the sales call. It's not cemented when they start getting compliance services that they go, oh, actually, I think I should be paying you for advisory that I think I'm actually already getting for free. It doesn't work like that. So you shift it to the front end you change how your sales process works, and then magical things happen on the back end. Clients are more appreciative. You can deliver better results because you have more cash. And guess what? They view you differently. They view your firm differently, which is amazing. It's amazing. So here's how this works. Client comes, or prospective client books call. Always step one, books call. On booking call, you get information. Information tells you whether or not you should talk to prospective client. If it's grandma's tax return, you're not taking the call. If they go, I've got 6 figures of tax liabilities, please help me, you're probably taking the call. Okay. You take the call, and when you come onto the call, you are angling towards one end goal. By the end of this call, I am presenting and selling, we call it a financial 360. I am presenting and selling, you can call it whatever you want, a fixed price to take you through diagnostic, a full comprehensive understanding of your life, of your finances, of the direction you're going. So you're getting paid for the work you would normally do for free. The QuickBooks deep dives, the reviews of the tax returns, you get paid for it because you should get paid for it. You're deploying your expertise in a very specific situation. You're giving personalized attention to analyze someone's situation. In what world would you not get paid for that? Doesn't make any sense. So you get paid for that. And people go, how much should I charge? If you're starting out and this is your first time doing it, $1,000. $1,000 for several hours, probably, right? You've got 30 minutes on the first call. You're going to have to do another deep dive one-on-one with the client. So 30 minutes to an hour, you got 90 minutes here. And then you're going to have to present your findings and obviously the next steps, which I'm going to cover next. And so now you've got, 3 hours all in involved, charge $1,000. I think most accountants would be happy with $300 an hour approximately for a service. Fair enough. I recommend $2,000 to $3,000. Some people are charging $5,000. I know one client who's charging $10,000. And obviously there's layers to that, right? You can roll in more services. So oftentimes you'll see clients do tax projections for that amount of money because clients are usually very, very curious. How much am I going to owe? They're oftentimes pulling IRS transcripts. What penalties am I unaware of right now, or you're aware of that I'm not aware of? Sometimes they're taking even a look at their financial portfolios, right? They're saying, yeah, these fees for these financial planners seem kind of wacky to me. Were you even aware of this? They're looking at their tax returns. Seems a little wacky here too. What's this about? Their books. So look, I just covered 5 services that basically you're always doing them in some capacity. You're just almost never getting paid for them until it's too late. So you just shift all that to the front end, and let me let you in on a huge secret. You will be stunned when you do this. The difference between the people you were doing this for free versus the people you have now paid for it. The people who have paid for it are so appreciative. They're bought in. They're like in truly like enraptured. Is that the word? They're just involved. They're like they're like, wow, I can't believe no one's done this for me before. And the truth is the 2 firms they worked for before probably did do it. They just didn't give a crap because they didn't pay for it. And that works. It's like, I would say it's the biggest transformation I see from clients is like they do this once and they're like, what was I ever doing before? Where have you been all my life? And now they never do it the old way ever again. Truly game changer. And you can do it for free. You don't even need to work with us. Just go do it. So then the second part, of course, is after you've collected the money for your 360, whatever you call it, doesn't matter, and you've brought the client through that buying experience and you give them the deliverable, and the deliverable is, of course, the report that says, if I were in your shoes, this is what I would do. And if you'd like us to do it and help you with it, here's the corresponding prices associated with it. And here are the alternative prices that you can expect to pay or the alternative cost. Now, I don't have time to go super into detail on that, but that is a critical part of this because most buyers do not know the cost of inaction and they don't know the cost of the alternative options. So inaction, in the case for the example for today, tax planning, the inaction is your tax rate stays the same. And One of my favorite things to talk about in the sales environment for tax savings is there's only one expense that gives you 0% return on it, and it's taxes. It's the only expense in your entire business that you have a 0% return on. You should want to make that as low as legally possible, as fast as possible, because every year that goes by that you don't change that, your business is worse for it. Like your profitability every year is worse for it. And your ability to increase profits and take home pay is harder every year because you have less cash. It's like, it's so you have to always tie the dots. Like, if you don't do this, this is what happens. If you do this with us, this is what happens and by when, and this is how much we charge for it. Okay. So those are like the big pieces of conveying value. Is you always go, this is what we do, this is how much it is, this is what you can expect, this is when it'll be done by. Okay. So those are all timing / speed components, obviously tied in with price and ROI. So, and you do that for each of them. We got to install your accounting system. We have to get you plugged in with this financial planner, whether internally or externally, because, this is what's happening. These are some industry trends we've noticed. And so they've got this beautiful report and they're blown away. And they also know the cost of inaction and they know the cost of the alternative. So there's really two alternatives, but you only highlight one of them. So one alternative, the alternative you highlight, is the cost of in-house. This is what an in-house bookkeeper costs. This is what an in-house CFO costs. This is what an in-house controller costs. Oh, you don't want to spend $250,000 on these salaries, but you want the vast majority of the benefits? Oh, cool. Here's my service proposal. It's 50 grand for the year. It's 70 grand for the year. And so they're basically cost of inaction, cost of alternative path. Your path is so obviously the right choice. And then if you tie in tangible hard returns in the form of tax savings, it's extremely hard to say no to it. Now, you'll notice that the only other alternative that I did not highlight is working with the other accounting firms down the street. And of course, I'm not going to highlight those. But the best way to offset, well, the other accountants I worked with only charged me $50 an hour. Why am I going to pay you $50,000 for the year? I'd be like, well, there's a reason you're on this call. There's a reason that the Financial 360 showed the gaping holes in your financial life plan and strategy. So you're welcome to go back to them. Or if you want to fix those things, here's the best path forward. So that's one option. I just point to the past. It's like, and what the work we just did, because that should be reason enough to want to continue working together. And then the second option, of course, is Dream Firm's staple. That's the staple of all rapidly growing small businesses in 2024, which is, I know more about your industry than the next accountant you're going to speak to, because all I do is work with digital marketers. All I do is work with real estate people. All I do. So yeah, I mean, you can go get $50 an hour worth of service, but you're not going to get a 500x ROI on your taxes. I mean, I literally just showed you the math. And that doesn't, again, our 500x ROI on your taxes is also including your annual bookkeeping services. It's also including fractional CFO meetings, and it's also including fill in the blank, whatever else you do. And so like the point is if when you stack value the right way, and stacking value is you have to make the comparison analysis. You have to prove that what you've already done is valuable and worth what they paid. And then you point to the future and the outcome, the time frame to get it, the cost required to achieve it, and the fact that it's still a good deal, and you make more money. Or you can, not do it and sell some hourly engagements. Your choice, truly. Like, truly your choice. I want nothing but the best for you. But I have one final point to just say on the hourly piece. Because that's the alternative, right? Like there are maybe some other alternatives, but The most common one is just like, well, even if I get paid $500 an hour, I could, this is good deal. And I brought up the example before, but here's why even ever just saying the hourly thing out loud kills your firm. Like it truly does, is because you implant the idea in the prospect's mind that at some point in the not so distant future, they can create their own customized proposal because they can just buy your time. Right? Like if I could just buy your time for $150 an hour or whatever the number is, I can just create my own package whenever I want based on what I think I need. And if you've ever talked to the average business owner about what they think they need versus what they actually need, it's like they have no idea. And so you're creating a mountain of crap for them to deal with and for you to deal with by simply letting it exist. You ever met a business owner who doesn't think that they know best at all times? Like, I know best. I know what I need for my bookkeeping. I know the right way to set up my entity. I just need you to review Tina's work, who I just hired as my administrator, and I think she said she looked at QuickBooks a few times before. So just check her work for the hourly rate, please. And you're like, oh my God, all my beautiful accounting systems, they just got set on fire. And it's like, you set them on fire because you introduced that complexity into your own business and you agreed to it. Should be like, no, I'm not doing that. That's not how we do it. We're never going to do that. We don't do it anymore. I'm sorry I said that to you. We have no hourly rates anymore, ever, for any reason. This is the price moving forward. And if they go, they go. And then it just frees you up to be able to put in better systems to attract clients that have 6-figure tax liabilities so you can sell at least 5-figure annual engagements. That's what I've got for you today. Thank you so much for your most precious resource. Remember that only you can create your dream firm, but we are here to help you every single step of the way. Have a fantastic rest of your workday and go kill it. See ya.